Hi, and welcome back to the show. My name is Joe Rabil with Rabil Stock Research. And for those of you who don't know, I've been providing stock research and consulting to institutional money managers for the past 30 years. And so today what I want to do is do a quick lesson related to trading in multiple time frames. And I'm actually going to show how I would go about using 4 different time frames for a single trade to be able to pinpoint the exact level and entry point, as well as using the higher time frames to really frame out the trade. So let's get into the agenda. So again, I want to look at a counter trend trade here, which would be in today's environment, we've got a lot of stocks that are in uptrends still, long-term uptrends, but they got overbought and they get stretched away from their moving averages. And there's ways to take advantage of this reversion to the mean trade. And so I want to give you an example of that today. So what I like to do is use the higher time frame to kind of frame out the trade, and then use the lower time frames to help with the setup and pinpoint the trigger. So I'll go through that. And then there were a significant amount of requests that came through. I'm going to try and get through all of those today. So let's go ahead and get into this quick lesson. Okay, so the example I want to use today is Home Depot. And I've got 4 time frames up, but they're 4 different time frames than I typically use. I've got a weekly in the bottom right. I've got a daily in the upper right. I've got an hourly in the upper left, and then a 10-minute in the bottom left. And I've actually boxed out on each of the charts the area that I want to discuss today. And so yeah, the goal here is to identify a stock that's in an uptrend that is overbought, and maybe, you know, there's a lot of stocks doing this and you can't really find a trade on the long side, and maybe you want to participate in a pullback trade, a reversion to the mean type of a pattern. And so what I would do is I would start with the higher time frame. And let's just look at this. Now, I don't have the monthly chart up, but that's actually extended away from the monthly as well. But right here on the weekly, look at how far price has gotten away from its 18-week line. And whenever we see that, we should expect a pullback of some kind. So we can see where we got stretched away here, and now we get stretched away again. The other thing I wanted to mention in reference last week is, remember we were talking about the DI lines and how if they start to contract and diverge, so price pulls back here, makes a double top, and look at how much of a divergence we have in the green, and look at the move that red is making. So we're getting a pretty significant sign of contraction forming using the DI lines in advance of this second peak. So if I go back and show you this crosshair right here at this low, look at what the DI lines are doing. This is making a lower low, and the red DI is making a higher high. We have pretty strong evidence that there's some type of a pullback or a contraction phase that should develop here. So once we have that, and we go back up and test this high, and we see the DI lines are really not playing along, then we can start to go down to the smaller time frame and look for other signs to develop. Now, again, I've got this box showing where I am on this second rally on the daily chart, but I want to point something out. On the way up here, we have a break of the trend line on the daily chart. So we break the trend, that's one, we break that trend line, and then we rally back up and test the high. So here's a peak, and we're testing it right here. Look at what MACD is doing on the daily chart. Look at what the ADX has done. ADX was really strong on this peak, and then we broke the trend line and rallied back up, and we didn't get any real strength in that second peak. So now all of a sudden, as we're rallying up into this area, we should be thinking we want to make a play down to the downside. Now, for me, I play very conservatively when I want to play a reversion to the mean trade. So I would be using the 18 on the weekly chart as my target, because I know I've got a pretty strong ADX reading here. I've got basically MACD did confirm the peak. So for this just to fall apart and break through, which it actually did, is not really what I'm looking to do. I mean, you can try and play for the kill and short it at 400 and cover it at 300, but I'm typically, when I'm playing counter trend, I'm playing hit and run. I want to just get in and get out and make a little bit of money, maybe when I would otherwise just have cash. So this is is sort of the tactic for that. And so what I would tell you is that as this rallies back up and I've got my 1 and 2 developed on the daily chart, I can now go back, and I know I have divergence developing on this time frame, and my target is going to be somewhere around this 370, low 370 area, which is the 18-week. So if I want to play this, it's kind of hard to do if I wait for the daily to really give me a setup, which would have probably been here and then a gap down from there. It would have been tough, or just breaking the 18-week. I mean, the 18-day, I mean, I guess you could have done that, but I'd rather go down to another time frame. So let's go down to the hourly chart. And during this rally here, notice what we've got. We've got another 1, 2, 3. So remember, this is now referencing this rally here. This rally there is the same as this rally here. And we've got the break of the trend line, and now we come up and test. So now we've got a 2 here. So I've got the ability, I'm looking at this trade, and I know that I like what I'm seeing in the DI lines on the weekly, and I think I have room down to 370. And now I'm up at 410, right in the 410 area on an hourly chart, realizing that I can't even show you on the hourly the target. It's way down here at 370. So this improved, by going down a time frame, it improves my risk reward dramatically. And I can look for a little bit more confirmation on this time frame. Now, because we broke the trend line and we've come up and tested, we can start to zero in on this area here on this time frame. Now, I could do the trade off the daily, off the hourly chart, no problem. I could let this come down and here, and then even though this gapped, I still have pretty good risk reward at 400, putting a stop up here and with a target down at 370. I can definitely do that. But there are times when you've got this set up, you're up against this high, you know you're extended on the monthly, you're extended on the weekly, you've got contraction forming where you might be a little bit more aggressive. And now we can reference this drop and this rally up, and that's what's taking place here. That's this drop and this rally back up. Look at what happened. We have another 1, 2, 3 develop where we break the trend line. That wasn't a perfect trend line, but we break the trend line, and now we've rallied back up, and look at what we get. We get a test of the high, but we also have an opposing trend pattern where the 18 is just crossing above the 40. We're basically a zero line reversal, but we have no ADX strength after a pretty good reading in ADX on the negative side, and we get this rally back up, and you could short this stock right here at 407, 408 or something like that. Now, 407, 408 would be coming in somewhere in here. Now, there's a couple ways to take this trade or do this trade. And one of the things that I think is very important about this is that you can use the small, tiny time frame for your entry to improve your entry point, but be very careful about trailing a stop off this tiny time frame. Okay, your target is way down at 370, and if you use the 10-minute chart, you're probably going to get stopped out along the way. So what you can do is use this as your initial entry and your initial risk. So you could come up above this bar, this big red bar showing up here, or you could use this prior peak here if you want to be aggressive. And that is a really tiny risk for a trade relative to the target, which is way down here at 370. So we're talking about getting in here and getting out down here, have all of this potential target with the stop either here or here. So in doing that, you've increased your risk reward dramatically in your favor, and you could actually take a couple stabs. Let's say you put this on and it rallies back up and then you get a second entry. You could take a small loss and then do it again and still have a huge amount of potential to make money. So I think this is the way you want to think. This is how you want to use the market in a fractal format where you have the same 1, 2, 3 develop here, a 1, 2, 3 develop here, a 1, 2, 3 develop here. They just keep developing in smaller and smaller time frames as you divide up the market into smaller time frames. So that's how I would go about doing a counter trend trade. You don't have to go down to the 10-minute. You could do this off an hourly. You could even do it off the daily if you want. But I'm just showing you the ways that you could go about using these same tactics, all the tactics that I've been showing you in these lessons, and take them down to smaller and smaller time frames because it will repeat over and over again. Okay, let's move on to the stocks now. Before I get into the stocks, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week. I'm a bottom-up investor, so I go through thousands of charts trying to identify what stocks are looking attractive. And in today's market, we're looking for stocks that are kind of doing the opposite of what the market's doing and holding up well, looking at relative strength, that type of thing. So anyway, if you're interested in trying the service, you can go to the individual package and use the coupon code StockTalk, and you can get the first 2 months for $50. So take a look at that. Let's go ahead and get into the stocks now. Okay, I've got my regular 4 time frames up now. Well, actually 3. I've got the monthly, weekly, daily here, and then another weekly with the relative strength and the zigzag overlaid to see the price structure on the weekly chart. So we've got PFG, Principal Financial, as this first request. And so, I mean, yeah, this stock is struggling on the daily. You see the violence of the move to the downside. And but this is, again, looking at the market in multiple timeframes, I think gives us better perspective. So this trend is down. We can see the 18 is below the 40 clearly. This is more neutral because we've broken the 18, but it's more like flat, and we're below both moving averages. But we're still in an uptrend on the monthly chart. So I think there's underlying support. You can see the price support here in the low 60s and the 18-month moving average with pretty good momentum characteristics on this time frame. So I'm of the opinion that this is going to find some support as it works its way down into the lower 60s. The problem I've got with I wouldn't be aggressive in buying this because look at how strong the ADX is to the downside. Look at how violent the break of the MACD zero line was. So we've got a little red DI showing up here. So no rush on this, but I would sort of assume we're going to have support down here, and then we're going to let this kind of create a 1, 2, 3 on the daily chart, kind of to reverse itself back to the upside before having any interest. Let's look at Mastercard. So we've got a long-term uptrend that is definitely losing some strength. And as this tested 400, so we went up to 400 here. Everything looked okay the first time around, except for the ADX. You notice how when this went to a new high, a pretty strong new high, ADX was way low down in here. It didn't even get above 25. So that was sort of an early warning sign that the long-term trend was losing strength. And then we came down and rallied up, and then we tested 400 again, and we don't get any strength here. But this time we don't have any sign of momentum confirmation on the monthly chart in MACD. So we can do the same thing as we work our way down. Look at this move and then this rally back up to 400 on the weekly chart. Look at how no ADX. We didn't even get green DI to cross above 25. So yeah, it rallied back above the moving averages. It turned itself back to kind of neutral for now, but there was not enough strength to assume that this was going to break out. Now we've got a stock that had a pretty nice move on the daily chart, but again, we didn't really have much confirmation on a momentum basis, and then it just gave it all up. Look at the ADX to the downside. That's based on the sellers. The red DI is on top and causing this decline. Look at the MACD coming back down. So now we're testing this key support at the 40-month moving average in this prior support level. I'm a little concerned to see the red DI kicking in again, and definitely concerned to see this ADX kicking in on this side. So I would not have any interest in buying this. The thing is that if I'm long this stock, I'm probably wanting to reduce the position or maybe even exit and then look for signs that the daily is turning back to the upside. This is a Canadian version of the Canadian Pacific Railway. Both charts, the U.S. stock looks good too. This was a nice consolidation sideways to the 18-month line. Notice how the 18 and the 40-month are moving up at about the same rate. That's a good sign. It's usually you'll see the confirmation of the ADX above 25 like that. So overall, I think this pattern looks good. We had a sideways consolidation we're trying to emerge from. Now, I like the way this relative strength is performing. The one thing I would tell you is that I don't typically, in this type of environment, I'm not a huge fan of buying a breakout, especially when it's overbought. You notice how it went from 86, 87, all the way up to 100 to break out. I don't really want to buy that breakout. So now what I'm looking for is a little bit of confirmation and seeing if this can hold the breakout area and kind of cup around and turn to the upside. And if green DI can hold, if that happens, then I probably have an interest in giving this breakout a try. Obviously, we're in a tough environment, so you have to take that into account. I don't ignore the market, but there's definitely deterioration taking place in and around this stock, so you have to keep that in mind. But overall, this pattern looks pretty good, and I think it's worth a shot if it can cross back up through 100. MATX, this is a strong stock. I mean, definitely has made a big move on the monthly chart. I mean, my one concern about this is how extended it is. Look at how far this has gone on the monthly chart. Now, we've crossed above this key level at 100. So if we can use that 100 as kind of like a support area, we've got good momentum in place. You could play this off the daily use the hourly into the daily and use those two time frames to trade this. But I don't know that I would play for any more than that based on how extended it is. You have to be pretty nimble if you want to play this. A lot of these stocks in the shipping area and marine transportation and stuff are trading very, very well. But again, you can't ignore the fact that these have already made a pretty big move. So be nimble if you want to play it. UNH, I think this is a good stock. There's the one thing that's bugging me about this. Let's zero in on the weekly chart. We've made a really nice trend to the upside, but notice what's happened as we've hit this 500 mark. Remember, I think these big round numbers are really important. Hitting the big 500 number, hitting 1,000, hitting 100. 250, 300, something like that. All these lines can be important, but definitely the big round numbers at 500, 1,000, at 100, I like to pay attention to. And notice how this is struggling there. And notice how when we came back up and tested this high, MACD didn't really confirm at all. It's pretty good divergence. I mean, even though this didn't make a new high, I would still consider this divergence. And what really bugs me is we had a really strong reading here. And then we showed a divergent peak, but that's okay. It was more like a double top. But then we made a new high here, and the ADX didn't. It made another lower high. So we've got divergences in place, but they're above 25. So that's okay. But notice what happens when this drops down under 25 after divergence. You should start to be on the lookout for some more of a consolidation, like a longer consolidation phase. So don't be in a big hurry here. I mean, I don't know that this is going to fall apart or anything, but I would shy away from doing any buying based on the fact that this ADX has dropped down, and I think this wants to spend more time consolidating. Nucor, let's go back to our 4 time frames. So nice chart, nice momentum characteristics. We've got a pretty good play developing here. The one thing that bugs me a little bit on this is the violence of the pullback. Do you see the big red bars to the downside? This happened kind of across the board in the steel area. So if I'm going to play this, I'm kind of using this as my backstop. And if I'm going to play it, I want to use 125 as my out. If this doesn't follow through, if this fails at the midpoint of this decline here, this violent move to the downside, if it fails, I kind of want to be out if it breaks 125. I don't have a problem playing it because it's one of the few areas in the steel stocks trading pretty well. It's hard to say whether this is going to be a short-term peak and it's going to take a little bit longer to consolidate. But I would be willing to give this a shot. Just use 125 as the stop point. The same thing kind of holds true with the FCX in the copper area. I think this looks good. The bigger picture looks fine. But is it going to consolidate a little bit more? Well, I want to use the 45 level for that. If I want to play this, then I think I just want to play it using not a lot of risk. And if it doesn't follow through and it comes back down through this low, then I know this is going to take more time. And so, again, I'm willing to try it if I want to play it from here because of the momentum and the overall pattern looks good. But because the market condition isn't great, I probably want to take less risk, maybe even do a smaller position size, something like that. So the question I had on this was about my pinch play pattern. So this was a strong stock pulling back. But pinching in on the MACD, it pinched in here. This is the pinch play that I really like because it wasn't that extended. It had broken out and pulled back. That's a really nice pinch play right there. ADX is just getting going. Then we make a move up. Now, you have to reference the bigger time frames, and this is really what the question was. The person was asking, is this too extended? Because he passed on this trade. I agree. This is too extended. I don't like this trade unless you want to go fractal, as we discussed, and say, okay, I'm going to pull back here, and then I'm going to go down to an hourly chart and look for my little opposing trend signal and take a lot less risk and just get in and get out for a small trade. I mean, it would have been successful, but overall, generally speaking, I would tell you just pass on this type of pattern. It's just too extended, I think. CSTM. I like this pattern too. I mean, look at the ADX in place on the monthly chart. We had a big move and then we've holding and we're still respecting the 18-month line. What's missing is the weekly chart looks like it needs a little bit more time. It tried to poke through, had a big tail. It's definitely some resistance up here at 20. It's trying to cup around, but on the move back to the upside, we didn't get much green DI. I think it just needs a little bit more time. Notice what happened on the daily chart. It tried to move up, and then on a pullback, it was too harsh. If this would have come down and held here and turned back and made a higher low here, then that would have been playable. But this was too violent to the downside. I think this wants to channel a little bit and trade in between 20 and these lows down here at 16, 16 and a half, 16 and 3/4. So I would give this a little bit of time, but keep it on your watch list. Gogo looks pretty good here. Look at the hold of the 18-month with strong ADX. Now we're getting going. Now what I would tell you is because this was very brief in the way that it consolidated on the weekly and we had a zero line reversal that just kind of took off, now you have to wait for the first pullback on the daily. With that little dip there, it just wasn't enough, I don't think. I want to be a little bit closer to the 18-day. Strong ADX here, but I want to get the risk reward a little bit better because my target's going to be up near these highs. MAXR, another stock that looks pretty good, but because this is such a deep retracement on the monthly chart, we had a good looking pattern, but it retraced and overran the 18-month. I want the weekly chart to come through with a little bit more strength. So I want to see this cross above and hold and prove itself, cupping around a 1, 2, 3 to develop with some improving green DI. BHP, I think this is pretty impressive. We got to look at this on a bigger picture, but this was just really violent in the way that it pulled back. And now we've rallied back up and we've overran the halfway of the decline. But I think this is going to form a trading range right now. I don't think it's ready to break out above these peaks or anything like that. So let this consolidate back. I think there's a pretty good support at 60 though. MP, so materials, MP materials. So I think this is kind of caught in a range. I mean, you just look at the weekly chart. We've got tails up here at 50. We've got pretty good support down in the mid 30s. Let this quiet down a little bit. It's too much noise, and I want to see the size of the bars get smaller. And if that happens, then this ADX will drop down. Maybe the MACD will work down a little bit closer to the zero line, and we can look for a setup at that point. But definitely nothing below 50 would be of interest, but I'd really prefer to see it quiet down a little bit, in my opinion. So nothing to do right now, but worth monitoring just based on the fact that it's still in a bigger picture uptrend. Okay, got a couple questions on a couple more commodities. Now, the bigger picture pattern here in copper is still okay, but I think we have to recognize what just happened. I mean, this tried to break out. You can see this breakout and look at what took place following this move. So let's zero in on the weekly chart. Look at this. We had a zero line reversal. We had low ADX. We had this thing all set up to go, and we get a big green bar, and now we're following it with a big red bar. Failure to hold the breakout. I think this has put this move on hold for a little bit. I mean, I don't think this is ready to go again. Now, the positive here is that I think there's pretty good support underneath. I don't think this is just going to fall apart, but it might end up spending more time in a consolidation between like the lower fours, maybe 4.25, 4.5 is support. Resistance is probably up above 475. Let this consolidate for now. I don't think I'd want to do anything with it right this second. Sugar. So I like the looks of this. Look at the nice looking pattern on the monthly. We've pulled back and found support right at the 18-month. We're getting the weekly going, but it's a little early. It had one quick drop and it's trying to break through the moving averages. It had a little bit of overrun. So I'd be looking for some kind of a little dip here and a pullback, like a move back up like this. Now this is still in pretty good position. So don't write this off. Don't give this a whole lot of time, but make this prove itself a little bit more. I don't think it's quite ready to break out through these highs quite yet. Okay, well, that's it for today. Thanks for joining me. Please send those stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.